XRP just flashed a warning signal that's only shown up twice before in its entire trading history, and both times, significant market moves followed. I'm going to walk you through exactly what's forming on the charts right now, what it means for your bags, and the 3 price levels that will decide which way this goes. This is XRP Financial Horizon, and if you've been waiting for a video that actually breaks down the technicals without the fluff, you found it. Let's get into it. Here's where things stand as of July 5th. XRP is trading around $1.13, according to Crypto.news market data. It's down a little over 1% on the day, but if you zoom out to the weekly chart, it's still up nearly 7.8%, which isn't nothing. Market cap is holding near $70.26 billion, and roughly $1.67 billion changed hands in the last 24 hours alone. So there's real volume behind this move, not just a quiet drift. But underneath these numbers, there's a technical setup building that a lot of traders are watching closely, and it centers on one specific price, $1.20. XRP bounced hard off the $1 zone recently and clawed its way back above some short-term support levels. That part of the story is genuinely encouraging. The problem is what's sitting right above it. XRP still hasn't been able to break through resistance near $1.20, and that number isn't arbitrary. It happens to line up with a much bigger technical marker, one that's been quietly building on the weekly chart for a while now, and it's the reason analysts are suddenly paying closer attention to what could happen next. An analyst who goes by Chart Nerd flagged something worth knowing about. XRP is approaching what's called a weekly death cross, where the weekly 20 EMA crosses below the 200-week simple moving average. That 200-week SMA happens to sit almost exactly at $1.20. According to the analysis, this is a weekly death cross 2-0. According to the analysis, this level could be shifting from a floor that supported XRP for years into a ceiling that now caps its upside. That's a meaningful shift if it plays out, because it changes how traders treat every rally attempt from here on. Let's actually define this properly instead of just throwing the term around. A death cross is when a shorter moving average drops below a longer one. On its own, that crossover doesn't guarantee a crash is coming. What it actually signals is that medium-term momentum is losing strength relative to the long-term trend. It's a flag, not a forecast. The real story gets written in how price behaves in the weeks after the cross shows up, and that's exactly why this 1.20 level matters so much right now. 0.20 level matters so much right now. Chart Nerd put it simply, the 200-week SMA near $1.20 has the potential to flip from a historical support floor into a supply ceiling. Translation, a price level that used to catch XRP on the way down could start rejecting it on the way up instead. For XRP to prove this bearish setup wrong, it needs more than a quick wick above $1.20. It needs a real, sustained reclaim, ideally a full weekly close above that level, showing buyers actually have control rather than just testing the waters. What makes this worth paying attention to is that XRP has been here before. Back in 2022, a similar death cross setup showed up right before XRP carved out a market bottom, and price recovered from there. But rewind further to the 2018 through 2020 bear market, and the story looks completely different. That death cross was followed by months of repeated failed attempts near the 200-week SMA before a bottom finally formed. Same signal, 2 very different outcomes. That's the uncertainty traders are sitting with today, and it's exactly why nobody's calling this one with full confidence yet. Now look at the daily chart, because the broader trend still leans bearish, with a pattern of lower highs stretching from May into late June. XRP did bounce off the lower Bollinger Band near $1 and pushed back above the middle band, which shows some strength returning. But the most recent candle closed red near $1.1325, meaning sellers stepped back in after that initial push. Right now, price is boxed between the middle Bollinger Band near $1.1064 and the upper band near $1.2094, and that range is where the next move likely gets decided. Here's the level that short-term traders should actually have on a chart alert, $1.1064. As long as XRP holds above it, the recovery stays intact. Lose it, and the $1.00 to $1.03 zone comes right back into play, an area that's already proven it can act as support once this month. This isn't a level to guess about, it's one to watch in real time, because a clean break either direction from here tends to move fast on lower time frames. On the momentum side, the MACD is actually showing some encouraging signs. The MACD line has crossed above the signal line, and the histogram has turned positive, both of which usually point to improving short-term momentum. But here's the catch. Both lines are still below the zero line, meaning the broader trend hasn't fully turned bullish yet. It's like a car finally accelerating again, but still climbing uphill rather than cruising on flat road. Improving, yes. Confirmed reversal, not yet. There's more context worth adding here because this bounce didn't happen in a vacuum. Crypto News reported on July 3rd that XRP hit a 3-day high, helped along by news of Ripple's expansion into Europe, alongside a fresh supertrend buy signal on the charts. That report tracked XRP's climb from around $1.02 on July 1st up to an intraday high near $1.1, which lines up closely with everything we've covered so far. So the bounce had real fundamental backing behind it, not just chart pattern speculation. A separate crypto news analysis dug even deeper into what XRP needs to build real momentum from here. It pointed to $1.20 to $1.25 as the zone XRP needs to reclaim to support a stronger rebound, while flagging 1.10 as the key support to defend. It also warned that if broader market weakness returns, XRP could slide back toward $0.90 to $0.80. That's a wide range of outcomes, and it's a good reminder that this recovery isn't guaranteed to run in a straight line. There's real risk on both sides of this trade right now. That same analysis raised one more number worth writing down: a monthly close above $1.40. Hitting that would go a long way toward confirming a genuine double bottom pattern on the bigger time frame, which is a much stronger long-term bullish signal than anything happening on the daily chart right now. Until that monthly close actually happens, the broader structure stays cautious, no matter how good any single week looks in isolation. So here's what actually matters going forward, condensed into 3 numbers. Hold $1.10 and the short-term bounce stays alive. Reclaim 1.20 and the death cross warning loses most of its teeth. Clear 1.40 on a monthly close and the entire long-term structure starts looking genuinely bullish. Everything else is noise until one of these 3 levels breaks one way or the other. So if you're trading or holding through this, these are the exact numbers to keep in front of you over the next few weeks. If this breakdown actually helped you understand what's happening with XRP right now, drop a comment and let me know which level you think breaks first, 1.10 or $1.20, because I read every single one and it genuinely shapes what we cover next. Subscribe if you want the next update the moment this setup resolves, because whichever way it goes, it's going to move fast. That's it for this one. I'll see you in the next video.